Now this is bad and it is getting ugly. Yes, folks, we got to talk about a whole lot that's going on in this market. I got to talk about several different stocks in this video here today. I'm even in this video, believe it or not, I'm going to share my perspective on gold in this video, okay? Yes, you heard me right, gold. In recent events that have happened out there, a lot of people want to know my opinion on gold in this video, and so I'm going to share my opinion on that as well. I'm going to show you through a lot of different charts in this video and kind of show you what's going on in the market. It's actually pretty unbelievable at this stage on some of these stocks and how bad they've gotten hit, okay? PayPal starting out here. I might have bought the stock today, and we might discuss that in this video as well. Might have bought a few shares. Forward P of 25 now for PayPal, which owns PayPal and Venmo, right? I mean, look at this. It's down to $138 billion market cap now. The stock hit another 52-week low. It's like the stock breaks a new 52-week low every single day. And when you get into a stock like this, right, it's a falling knife, right? And folks are looking at this and like, where does it end for PayPal, right? And I can tell you, it's rather soon. Let's put it that way. It's rather soon. I don't know if today's absolute bottom. I'm not going to stick my head out there like that. But I can tell you, PayPal is getting pretty darn close to a bottom. When you start talking about a forward PE of 25 for this stock, you start to get down to levels that it just becomes silly. You know, like silly pricing essentially. And when you start to get in that range of silly pricing for a company like PayPal, like there's no reason PayPal should trade at a forward PE of 25. PayPal should usually trade at a forward P of anywhere from 35 to 45. Anything above 45, you start getting rich on PayPal, especially if you start pushing 55 to 60 in those ranges. You know, that's like, getting up there, but a forward P at 25 is just rather silly. And so at some point, valuation has to matter, regardless of what the Fed does or doesn't do, or all that mumbo jumbo and all the scary stuff that everybody talks about all the time. Regardless of that, at some point in time, valuations start to have to matter again, and a stock like PayPal ends up, obviously prospering in a situation like that, right? This might be the most amazing thing you're going to see in this whole video. I got a lot of pretty cool stuff to show you, but this might be the most amazing thing, okay? Look at this. So July 7th of 2019, PayPal stock was $120 a share, which is above where that stock is at now. Think about all the progress PayPal's made in its business model over the past several years. Think about the balance sheet, the place the balance sheet's in now, right? Think about everything that has transpired in PayPal's favor over the past several years. And this stock is trading under what it was basically, back in 2019. That's nothing short of extraordinary. I know that I use that expression maybe too much, but to me, that's nothing short of extraordinary. When we're talking about PayPal's trading under what it was in 2019, you're getting down to levels that are just, like I said, these levels for PayPal now are just getting, to be quite honest, silly, right? When it comes to PayPal, this is a company in 2019, when we just looked at a stock price, right? In 2019, this company did $17 billion of revenue. In 2022, they're expected to do $29 billion of revenue. And that's an average analyst estimate. That's not even the bullish case. $29 billion in 22 they're supposed to do. It is $17 billion. So, this company is basically supposed to do $12 billion plus more in revenue than they did back in 2019. And the stock price is lower today than it was back in 2019. That's crazy, okay? And that's when I talk about we're getting down to silly levels on these stocks now, right? If you look at EPS, in 2019, PayPal did $2.07 of EPS. $2.07. In 22, the average analyst estimate, once again, this isn't even the bullish scenario, the average analyst estimate for PayPal is $4.78 of EPS. So this stock is trading for less than it did back then, yet the EPS is like, way over doubled up, and the revenue should be up $12 billion plus versus back then. We're getting down to silly levels. Forward P of 25 in the stock. Once again, I don't know if we're at an absolute bottom here today for PayPal, but I can tell you we're getting pretty darn close, because these levels are, you can only go unsustainably low for so long in the market before valuations start to matter and things have to, flip essentially. And one thing I will say is, I just started buying the stock here in the past week or so, right? And that's, I would say, if you want to look at a little more of a bullish indicator for the overall markets, the fact that I'm actually buying a large cap stock is a pretty good sign, because it's been quite a while since I bought large cap stocks. I think the last time I bought large cap stocks for the most part was probably back in maybe December of 2020. sometime around then, right? Because just a lot of large caps has just been trading really, really rich. So the fact that I'm actually out there buying actively right now a large cap stock, I think it speaks volumes to kind of where valuations have gone and how much a lot of these stock prices have come down. You want to know another stock that I feel is a phenomenal deal right now, and it's a mega cap? Look at this one, okay? The Meta Platforms. This stock is getting down to silly levels, and I hated their guidance. I did. I didn't like that earnings, that guidance, everything. It was no bueno. But at the end of the day, we can't deny that this stock's getting down to silly valuations. A PE ratio is now 15. Are you kidding me? For a Meta, 15 PE? Once again, these type of valuations, they don't last for long. I can promise you that. Under a $600 billion market cap now, volume's been ridiculous for this stock. I took this, an hour or two before the trading day even ended. 70 million shares had traded. The average volume is 25 million. Volume's off the charts. The trading activity's off the charts. The PE's gone down to ridiculously low levels. That's only sustainable for so long, and this stock's going to have to come up. And so now we're in this situation, right, with Meta, where this stock is honestly, just to be quite frank, a steal deal. Even after I hated their earnings, it's still, I can't deny the fact that this isn't like an easy money stock over the next few years. It absolutely is. If you look at this stock prior to Rona, right, in January 12th of 2020, this stock was 222. It's trading under that today. I mean, that's crazy, right? Look at this. So, January 2020, so that comes off the year of 2019. 2019, they did $70 billion of revenue for Meta, right? This year, their expected average analyst estimate to do $135 billion of revenue. No, that's not even the bullish scenario for this stock. $135 billion, right? If my math serves me correct, that's $65 billion more they're expected to do in 22 than 2019. Basically, that's almost, a double up of their revenue. There's almost a double up of their revenue in a matter of a few years. Like, think about that for a moment. And the stock price is trading lower after all that has played out, right? And this is a company that, at the end of the day, they own two of the most profitable businesses in the world, Facebook and Instagram. Plus, they obviously own WhatsApp, which is huge. And then they're in the prime position for the metaverse. Like, there's nobody that's can even stand up to them right now. Like, they're clearly out in front of everybody, not just out in front of everybody, but out in front of everybody by a mile. And so this is a stock I'm looking at that's at a PE of 15 now. And with their balance sheet, with their business models, with their future business models and everything, this stock is just trading at silly valuations now at this point in time, and it can only stay this low for so long. And I'm telling you, when this baby flips, it's going to flip pretty darn good. And this is one of those stocks I'm an owner of. I would be actively buying it if it wasn't for the fact that I still got to have some capital around because small cap season is about to start. So I don't know what could happen with the Chef in the short term, or Corsair Gaming, or Honest, or SDC, or any of those stocks. But if it wasn't for the fact that I still got to wait for all these earnings to come out, I would actively be buying the stock here today because it's a steal deal. Let's put it that way, right? This is a great piece that was put out in January of 2019. So basically, if you didn't know, the market got really rough in October, November, and into December of 2018. And at one point, we were on pace for the worst December in the history of Decembers in the stock market in 2018. Lucky enough, the last week of December, market started to bounce back, so we didn't technically have the worst December ever. But it's funny, they say the markets are behaving like an irrational teenager. And just to be quite frank, the market gets like this from time to time, where it just starts, getting really irrational. And the beauty with being a stock picker is you can take advantage of irrational pricing. We have irrational pricing going on for PayPal right now. We have irrational pricing for Facebook going on right now. Meta. I don't know why I keep calling it that. Meta, okay? It's just too many years of that being programmed in my brain. We have irrational pricing on those stocks going on right now. And obviously in the small cap space, there's crazy irrational prices. And the thing is, it only lasts for so long. It does not stay like that forever. Things do have to end, right? Now, Yarndini, I love Yarndini, but they're slacking, man. They haven't updated this since the 28th. I'm like, come on, Yarndini. I love you guys, man. I appreciate you guys putting these charts together, but, it's been a little while. Like, let's update these charts, please. But nonetheless, if you look at S&P 400 mid caps, we're trading unsustainably low right now, and we're due for a massive bounce in mid caps, essentially. The market can only stay in low ranges so long. If you look at this, right? There's only I never like to look at a stock market crash scenario because it's like all the metrics get super messed up in a major recession or crash, and it makes things kind of look weird. So in normal economic times, right? we've had three scenarios where mids have fallen this low. One was in the one I just spoke about, the December 2018 crash, right? Well, I don't want to call it a crash. It was a correction. We had another scenario like that play out in 2011, 2012-ish. We traded, below where we're at right now. And then 2002, 2003, we traded in here for just a little bit, like a very small amount of time, essentially. And so nonetheless, what you can take away from this is mid caps are trading ridiculously cheap. This is not sustainable. And eventually we're going to have to bounce up and get more into the 16 to 19 range, which is where we should be for mid caps, 16 to 19. And what that means is likely there's going to be a lot of mid-cap stocks that make some pretty strong moves over the next year or next couple years, okay? Small caps are even a whole different story. Small caps are trading so dang cheap, it's ridiculous. So there's only two real scenarios where we've had small caps trading this cheap in any time in modern history. One was 2002, 2003. We barely touched down to these levels during that time period. And the other time period was 2011. We're even below where we were in 2018 correction, the December 2018 correction, right? And so there's only two time periods in modern times, basically, where we got down to these sorts of levels for small caps, which is just ridiculously unsustainably low. And I put these arrows up here too, because just like, this is an unsustainable market when you start trading, let's say, above 20 for mid caps. For forward Ps, you're at unsustainably high levels and you're going to have to come down. And you're only going to be able to trade up there so long, and you're going to have to come down. You're going to come down hard and fast, right? And with small caps, same exact thing. If you're trading, over 20, over 21 especially, you're trading way too high, and you're due for a massive, basically come down. And it's rough. But if you ever see small caps trading at 20 plus forward Ps, you should be a little concerned. And that's obviously where we got up to kind of going into 2021. And we were due for a come down. The difference is we have come down so much. We've come down too much now, and now we're trading at valuations we haven't seen in like a decade plus. And so that just kind of gets a little silly. But you don't get these time periods very often, and when you do get these time periods, you do have to take advantage. And if you don't take advantage, you're just missing out on a whole lot of money. Okay. Now, some metrics I will say are improving that we looked at about a month ago or so for Google Trends, and I think these are really important to kind of watch and see how they play out over the next few months, okay? So something I like to look at is like home loan, for instance, right? And home loan really dropped off a cliff. Now, I will say there's been a nice recovery very recently for home loan. So that is, if at the end of the day, the market's core worries are around two things, right? One is the Fed. That's the main worry. The second worry is around, could we go into an economic recession or something like that and the actual underlying economy falters? And so these are sorts of things I like to look at. That's kind of like forward-looking indicators, like are we in some trouble or something like that? So home loan has definitely been coming back. We saw a huge dip. Part of that's probably inventory related, the holidays, people just, spending time with their families and things like that. The third thing is, I think Rona went so crazy in the back half of December and into the beginning of January that I think it honestly hurt the overall economy, and I think it hurt everything. I don't care if you're talking about buying a home, buying a car, going out to eat, anything. I think it did some real damage to the economy in the short term. The good news is Rona numbers are tanking through the floor now, and should continue to for the next 1 to 2 months. And so that's the good news when it comes to that things are headed in the right direction. But yeah, home loan, we have seen some promising things kind of coming back with home loan there. If you look at car loan, we've been holding pretty decent. A lot of car companies still have pretty low inventories and things like that. And, a lot of them aren't even running ads as much right now because they don't have the inventory to really push up sales. So, it's been holding pretty decent recently. I think that's one to pay attention to as this year kind of transpires, and hopefully the chip shortage continues to alleviate and autos continue to, get more in a supply state. And if you look at auto loan, we've seen a decent trend, at least upward, nothing crazy, but at least things are trending the right way when it comes to that. But these are very important Google trends to watch over the next several months, in my opinion, and kind of keep track of them. Do they worsen? Do they get better? For right now, it looks like they're getting better, and so that's definitely good news if you're worried about the overall economy, right? Because if no one's buying homes, No one's buying cars. No one's going out there and buying iPhones or whatever, right? There's something to be worried about. By the way, Apple, I still can't get over the fact that they beat revenue by $5 billion in last quarter. Like, it's just crazy to me. Like, I can't get over that. It's just ridiculous, right? Unemployment search term continues to stay very, very low, which is something, obviously, if you have any worries about the overall economy, that is something you want to see. You want to see unemployment search term stay very, very low. And that's exactly what we're continuing to see play out. And so that's definitely good news as far as that goes, right? Now, I want to speak about gold for a minute. So gold is, a lot of folks have been asking questions about gold and kind of my 2 cents on this and things like that. Okay, first off, so I had a accounting teacher or instructor in college, and he taught 3 levels of accounting, and he was great. He was a great instructor. I love the guy. I think he always had the best of intentions, and he did a great job of taking me from a place I had no clue about income statements or balance sheets or cash flows, and he took me to a place where I understood them on a very, very high level. But what I will say about that gentleman is, man, did he love gold. If you think Peter Schiff pushes gold hard, you should have been in my accounting instructor's classes back in the day. Oh my gosh, okay? That was a whole other level of pushing a gold on people. And, I looked at gold and just kind of what it's done since when I was taking those accounting courses back in, 2008, 9, 10. And, 2009, gold was over 1,000, right? Over 1,000. Here today, think about all the money that's been pumped in the system over the years. Think about all the time periods of fear and those sorts of things. And gold's at 1,800 roughly today, right? At the end of the day, when it comes to gold, it's just not a very good performing asset class. It's just not. And the tough thing for gold is gold really, when it comes to gold, it really, in order to buy into gold, you really have to be fearful. You have to be fearful of what the markets are doing, and you have to not believe in the dollar and a lot of those sorts of things, right? And that's a lot of the thought process that goes through most people that buy gold. They're like, I don't want to call them like the doomsday crowd, but they're usually negative on the markets. They usually are the folks that are going to say the Fed's always pumping too much money out there and all those sorts of things. They're going to speak very much in the same tone. But the issue is, gold is kind of the boomer thing when it comes to, that mentality. And nowadays, with the newer generation on the come up right now, right? I'm talking about the millennials and the new generations. If they want to think negatively about the dollar and those sorts of things, what do they like to go to? They don't like to go to gold. What they like to go to is Bitcoin at the end of the day. And it's hard to fight that psychology and try to say gold's the way when most of the younger generation that have money, if they're going to think about the dollar being devalued or the dollar doesn't matter or all these sorts of things, they're naturally going to want to end up putting their money in Bitcoin. They much rather buy Bitcoin than they would want to buy gold. And it's hard to change that psychology. It's really hard to change that psychology in any meaningful way for the next generation. And so when you could, talk about the fear tactics, right? And why people should be scared and all these sorts of things, and the dollar's going to collapse and all the ways that the gold bugs always talk. The new generation hears that. And if they believe that, they don't think I'm going to go buy gold. They think I'm going to go buy Bitcoin. Okay. And so that's why gold has such a trouble moving up nowadays, in my opinion, and why gold's gone from, 1,000 to 1,800. What has gold gone up? 80% or so since, my accounting instructor back in the day was, preaching about how great gold is. That's horrible. That's just horrible performance over the past 12 years or whatever, 13 years. That's horrible, horrible performance. And so I think that's kind of some food for thought in this situation is most of the younger generation, if they hear or they believe that type of stuff, they're like, okay, cool, I'm going to buy Bitcoin. And so this is some kind of food for thought when it comes to that, okay? Now, I've caught my son blowing a bubble, and so I thought, man, maybe we're in a super bubble. Maybe I should sell out all my stocks. But did I do that? No. I went ahead and I bought stocks here today. I bought 125 shares of PayPal here today. I'm going to continue to buy that one. I think we're pretty close to a bottom on that one, but heck, if it keeps falling, I'll keep buying. And they want to give me free money. I'll take free money. That's fine with me. So anyways, guys, me, Mr. Buy the Dip. So that's what I always do. Hope you guys enjoyed this video. As always, we got a massive deal coming up for the Private Stock Group Financial Fortress program. This is the best time to take stock market investing serious that I've seen in a long time. Let's just put it that way, in probably a decade. So if you're looking to get involved with the stock market, learn everything that you need to possibly know about investing in stocks, how to research stocks, all those sorts of things, I teach that in the program. Check out pinned comment down there. As soon as that deal drops, we'll send it over to you. Much love as always, and have a great day.